So welcome everybody to this webinar. Thank you very much for giving up your time to spend a little time with myself and Tejas today, this morning, this afternoon, this evening, wherever you are in the world. We've got a really strong global spread in the room today. Every continent but Alaska represented, which is exciting. My name's Ross. I'm the Director of Client Delivery here at Humentum. Humentum is a global not-for-profit that helps social good organizations strengthen their operations, leadership, compliance to achieve a lasting impact. And part of the work that we've been doing is been working on this international not-for-profit accounting standard for around the last 6 years or so, with Sam Masuki at the helm. I'm sure many of you know Sam, and this is really core to what she's been doing and a testament to her hard work. Tejas has also been working on this since 2021, and has been playing a pivotal role in all sorts of areas of bringing this together. And I'm going to hand over to her now, and she can take the webinar from here. So over to you, Tejas.
Brilliant. Good afternoon, good morning, good evening. My name is Tejas, as you all know. Just wanted to check, signal me if you can't hear me properly. There are times when my microphone acts up. I would like to introduce myself. I am from India. I live in Mumbai. I have been working with nonprofits for more than 20 years now in India and up until recently in Southeast and South Asia as well. I basically self-invited myself to the IFR for NPO project because I had been following progress of, and finding the need of reporting standards for NGOs across the world. Please excuse me if I shift between the term NPO and NGO, because in India, the term NGOs is used frequently. So I try to correct myself and catch myself when I say NGO, but please understand that when I say that, I mean the NPO. So let's get on with it. And you've seen the poll, and I hope you have engaged in it. It gives us a bit of an idea as to how to cater to the different kinds of levels of engagement you all have with INPAS. Do we have the results? Can we have a look at them and maybe not? I don't know, whatever. You can decide how you want to do that. We're going to go straight into, okay. Oh, perfect. This is very, very helpful. So then I'm going to spend a little bit more time and explain to you what INPAS is. And, we have 60 minutes. I'm trying to slot myself, correct myself, and see if I'm not, going beyond the time limit that I've set for myself for each of these sections. We can move on to the next slide, Ross, if we can. Thank you. Yeah, so INPAS, which in its formative years was called IFR for NPOs. I was a part of this process since 2021 when I was invited, or rather I self-invited myself to the project, but then I got invited to become a part of the practitioners advisory group, which
Tejas, you've gone on to mute. Sorry.
Sorry, how did that happen? I'm so sorry about that. I don't know how that happens. Anyway, so what is INPAS? International Nonprofit Accounting Standards is the first internationally applicable standard for accounting and reporting for nonprofits. It has taken about 6 years and a lot of work and a lot of engagement from almost everywhere in the world. It provides the guidance to create the whole of entity general purpose financial statements. It also has these elements of creating harmonized grants reports as what we will be discussing later in this in this webinar. Few things about INPAS. It is principle-based versus rule-based. If I am going to assume, if I'm wrong, I'm really sorry, that most of you understand a little bit of finance. And what we mean by principle-based versus rule-based, for example, materiality is a principle and, of accounting, and that's understood as, how it is understood as in INPAS is a part of the standard. It is designed for small and medium-sized NGOs. The creators have tried to, make it useful for everyone. However, small organizations which have cash basis accounting or a lot of cash transactions may not find it very useful, and neither would the huge INGOs or multi-million dollar organizations. It's based on the IFR for SMEs because there had to be some structure that we could use, a map that we could use. And it has been, modified to meet the requirements of NPOs. And most importantly, it is a recommendatory standard. It is not mandatory. Obviously, it depends on your geography. It depends on your local regulators, whether you can, fully embrace INPAS as a part of the statutory reporting in your country. Next slide, please. A little bit about the due process. I hope you're able to read this. I tried to put in the entire web page onto this, so it might be a little hazy, but basically we're trying to tell you how the process of INPAS development happened right from, I think, 2019 till 2025. A lot of consultations have happened. A lot of documentation has been shared. There's been videos on the IFR for NPO website. Some of them continue to be there as well. We have tried to take a lot of feedback. The creators have tried to. I will not take the credit of being a part of the creator team of INPAS, but I still call it a we thing because that's how we've been involved in it. So yeah, we have had expert inputs, consultations, feedback, analysis, a lot of back and forth, and a lot of arguments through the process. But here we are now. So that's about the due process. You can see this on the website. I think there's probably a link to it on the chat that Ross will put up. Okay, next slide. Thank you. Okay, so just to give you an idea of how broad and widespread INPAS is, we have 276 pages, 37 pages of annexures. The standard is divided into these various groups. H jumps to Z for some reason, but that's how it is. And if you go onto the standard, it is very easy to navigate. All of these groups have further breakups and further explanations and sections and a lot of other clauses, etc. I should have said this beforehand, but if you have any questions, you can put them on the chat. We will address them. We'll try to address them at the end of the webinar. Thank you. Okay. What we're concerned about today is a part of group H, which is about, there's a bunch of things in there, out of which the last point, which is in H4, is about the presentation of supplementary statements. It is called harmonized grant reporting because that's the intent of the practice guide, which is related to H4. Now, According to me, the practice guide 1 serves a dual purpose. Firstly, it gives a sector a chance to put into practice the concept of harmonized grant reporting. So, and the second is it's a bite-sized serving of INPAS, right? So, the concepts and principles of INPAS are a part of PG1. And the practice guide 1 does not necessarily mean that you have to have an entire INPAS compliance. You don't necessarily need to follow INPAS to be able to use the PG1. So it's a good introduction and good getting to know way. Yeah, I think I'm almost out of time for the introduction part, so I'm going to stop here and we can jump into discussions on the practice guide 1. If you have further questions on this section, please feel free to put it on the chat. We can move on. Thank you. Yeah. So what is this? It is not just another format. That's the first answer I give to people because that's one of the main concerns. So whenever I go out in the field to talk to clients, to talk to organizations, I get this question that, what is INPAS and what are you doing in it? And what is this supplementary statement? And please don't add another format in our lives. Whereas what I try to explain to them is that takes a little bit of imagination here, right? Because what we are talking about is that we have been spending a lot of time and energy and resources on creating multiple donor reports. Constantly, we've been doing that. And if the adoption of the practice guide 1 is embraced, especially by donors, if there are any donors here, please hear me. Or the NPO will have to report on the same format for all of its donors, all of its projects. And that is a huge time save, even if the general purpose financial statements are different based on the statutory requirements of your geography and the requirements of your context and what the organization wants to report and disclose. Some very specific bits about the practice guide 1. It has been published in INPAS or as a part of INPAS, but it can be used without INPAS, as I mentioned this earlier as well. It's a standard format with specific requirements. It says it needs to be on accrual basis. It has to have a certain harmonization of headings. We will talk about it as we go further. And there's also this entire big section on notes, which is crucial to be able to give context and give an understanding of the user of the practice guide report. Just a slight difference from INPAS. It is rules-based, okay? So it includes financial information only, and there are rules saying these are the steps that you need to follow, these are the classifications you need to make, this is how you need to report various aspects of your grant or activity. However, it is also designed to include a reconciliation with general purpose financial statements to enable assurance and audits. If used with INPAS, as per INPAS H4, it takes a huge step towards strengthening credibility, transparency of the organization's financial statement, because the supplementary statements come out of the INPAS of the accounting that is following INPAS, but it is still non-mandatory and it is flexible. So, the practice guide is not very long. It has, I think, about 30 pages. I'm not sure how much it is, but because I've not looked at the number of pages, it feels very short to me because now I'm pretty much used to looking at it all the time. Just a little bit about how we set up a committee to create this. So out of the bag, and I believe out of the technical advisory group as well, or I may be wrong, I don't remember it correctly right now, we had a number of people who decided to be a part of the committee that was working on supplementary statement formats. And I jumped at it because I thought it was something that was really, really important for the sector and for NGOs, especially the ones that type of organizations that I was working with. So that was how it was created. It went through its usual iterations with the committee, with the PAG, and once that happened, it was then fully released. So this is about a little bit about the practice guide 1 and how it was created, and um, try to give you a very quick understanding of it. I don't want to spend too much time on it because there's a lot of other stuff that we also need to discuss as to how this can be put into practice. Any questions on this? Please put it on the chat. Thank you, and we can move on. Yeah, Ross, can you just stop the little penguin? Thank you. Yeah. If you go back to the slide and then just press pause, then the penguin will stop moving. If you go back, just go on to the next slide. Yeah. Are you able to do that? Maybe it's a beep.
What did you need me to do, Tejas? Sorry.
It needs to stop the penguin. The
How do I
penguin
stop
keeps.
the penguin?
Yeah. My daughter suggested that I do a GIF instead of a picture. So there it is, and now it keeps moving. So anyway, it can continue to move. It's fine. What is the benefit of the practice guide 1 for nonprofits? The most important thing is that it enables segregation and consolidation of financial information while maintaining the integrity of data. How does it do that? Through the reconciliation processes and through the auditability of data. The connection between the supplementary statement and the general purpose financial statements have to remain strong, and it has to be attested, and you need to get assurance from your auditors that there is a match between what is showing in the supplementary statement and what your general purpose financial statements are showing, meaning the little piece that you take out from your general purpose financial statements or the accounting data for reporting on supplementary statements should match, or rather should be a part of the data that is used for the general purpose financial statements. Reconciliations are done of the opening and closing balances of funds, which is very, very crucial, of total expenses of all supplementary statements. So, for example, if you have a supplementary statement which is only for a particular project, or a supplementary statement which is only for a particular donor or a thematic area, all of that, the total of all of those expenses, of all of the supplementary statements that you've created of the different aspects of your work, should be the total of the expenses in the income and expenditure account. Now, maybe, I mean, if you look at it in the way things work in India, we have a lot of different statutory requirements, and sometimes those kind of overwhelm the process. The supplementary statements make creating a supplementary statement for a particular grant or for a particular activity makes it really easy for the organization to report without actually touching the statutory disclosures as required by Government of India. The second reconciliation is very important. It's that of the income amounts to the cash amounts that are received in the organization in the specified activity in that period. Auditability also talks about the fact that, like I just mentioned, the supplementary financial statements are derived from the general purpose financial statements, while the mandate of a donor audit may remain limited to the utilization of funds. Supplementary statements include a lot of other aspects of the grant. It includes the movement of the funds. It includes transfer of a grant into different funds, and the reliability of data increases because it's a more comprehensive picture. All reports either divided or aggregated per activity program. So there is a lot of flexibility that PG1 allows you. You can make a supplementary statement which is per grant or per activity or per program or per source of funds. Like, I don't know how things work in other places. In India, we have a very strict policy on using foreign funds, and it is, you need to separately report them. It also increases the efficiency of the finance team, decreases burden of reporting, cost of audits, and ultimately improves financial control. If you use the supplementary statements, the PG1, along with INPAS, it will give better insights and information critical to good decision making in the organization. So these are the things that the creators of INPAS and the PG Guide 1 felt, and we've been talking about this and about how it is going to improve the sector. However, apart from NGOs, the sector contains the really huge stakeholder, and which is the donors. So we have something for the donors too in the practice guide 1, right? So can we go to the next slide where we talk about how it is good for donors to have? It's going to create greater confidence in the data. You will have assurance from the auditors. There's consistency in policies because over the years, you're using the same policies across donors, across projects. Timely reporting with enhanced transparency across restricted and unrestricted grants. You can have a timely consolidation of different grantee reports. So if you have multiple grantees doing the same, under the same thematic area of, I don't know, improved childhood, then you will be able to compare the reports and compare the performances, the financial efficiency of all of those organizations, because the format is the same. And as a donor, you do not have to spend time in reorganizing the formats as they have come from the NGO or the NPO to make the data comparable. Budgets versus actual reporting, renewal of grants, due diligence, and training for new grantees becomes easy because this is one consistent, one comparable report which everybody is using. There's also comparability across geographies, across projects. I mean, I cannot begin to list the number of things that this will improve for a donor as well. It's kind of, have your cake and eat it too. So I thought that would, be a good way to kind of explain to donors how this will benefit the PG1 supplementary statement process. I think I have run through my time on this, and I'm going to kind of jump into what the PG1 looks like. Is it possible to? Okay, yeah. So there are some.
Sorry, Teach, did you want me to share the guide or this slide?
Yes, please. Could you please share the guide?
Yeah, of course. Can you see that?
Not yet. Yes, we can.
Okay, great.
Okay. Yeah, so as you can see, this is a 35 page document. The last few are documents that are the reports or the formats. We can continue to move on from the introduction. Just right about, yeah. Yes. If you can see, I mean, I'm going to jump straight into the format because this will kind of make sense through that, is that this is the format that has been recommended in this practice guide. Where we are talking about the income and the expenses, a very important aspect of foreign currency gains and losses, transfer between funds, other financial movements of that particular activity, grant or donor, funding, and the the opening and the closing balance of funds. There is an optional adjustment of capital and inventory costs as well, which organizations can or cannot do depending on what they they prefer. Rest of it has to do with all the explanations on what should be a part of income, what should be part of expenses, how there are really good comprehensive examples on what each class of expenses can contain, as you can see here, and also have explanations on each of the main heads that are used in the format. Oh, I see somebody clapping. Yay, thank you. So yeah, so that's our guide. And yes, coming to the very, very important aspect of notes, which is really, really comprehensive. It's they talk about the scope, they talk about the basis of preparation, a lot of aspects about the income and how it is being recognized, the expenses and how they are being recognized, support costs. Each of them need to have a note. You can even provide, like, for example, if you see the format, you will see the expenses are as per the natural classification of expenses, which as a concept, I hope everybody is familiar with, the natural and the functional classification of account heads. Sorry, I'm making you run up and down, Russ, but employment, travel, and you're right. It was supposed to be on the format. Thank you so much.
You want me here?
Yes, yes,
Okay.
on the format. As you can see, employment, travel, subsistence, supplies and materials, all of these are natural heads. They're not activity heads. They're not based on what they will give you as in terms of the output of the activity or of the project. This mainly is to maintain consistency across organizations because every organization is doing different work. So if you use functional classifications, it does not end. So this is the best, way to kind of consolidate all the information. However, if you feel the need to have a functional classification, you have the notes which you can use. Yeah. So without going deeper into this, can we move back to the PPT, please? Fantastic. This is, about some of the main things that I would like to highlight. One is that the reporting period, the end date and the period covered in the supplementary statement needs to be right at the top of the report. The presentation currency, as in what currency are you, using the report, showing the report in, needs to be there. And it should be the same as the currency that you're using for the general purpose financial statements. Restricted versus unrestricted, you can state it clearly within. So for example, if you're doing a project-based supplementary statement, in which the funding that has been used is from a particular donor, as well as you ran short, so you had to go through obviously you wanted to do more, so you kind of used your unrestricted fund. They should be in separate columns. However, you can club all the unrestricted funds together. So you can have a column with all of the unrestricted funds. So when you're reporting for the report for the project, you can use both of those, sources of funds. Consistent treatment is extremely important. Of the three, some of the INPAS principles on recognition, measurement, accounting policies that are used in the general purpose financial statements. All of this you will find in the practice guide. All of these explanations are there. However, I tried to kind of, take the crux of it to explain it to you. Yeah. We can move on to the next slide. Very, very important aspect of the supplementary statement is that you can use it with or without using INPAS for your general purpose financial statements. So most of the people who, if you go back and are inspired to do, to use the practice guide, you will fall under the category of not using INPAS for your general purpose financial statements, but using it just the practice guide for reporting for a supplementary statement. Income other than grants and donations. Okay, let's jump into the format and let me try explaining to a little bit. Where am I on time? Really not doing that great though, but yeah. We talked a little bit about the heads of classification of expenses. You have to, now what are the steps? And I tried doing them when I was preparing for this webinar, and it is very interesting. You have to map all of the expenses for that specific grant project activity against these classes that are shown in the format. They don't fall in the examples that are shown in the practice guide, then it can be classified based on the general descriptions. For example, if you don't have a particular head, like which is very specific to your geography, like for example, I can't think of anything. Maybe I put something in my notes. Let me check. If there's something that is not falling in the example set, for example, you have hired a an HR agency to kind of outsource the staff to you, it may not be a part of the list of examples, but you can then use the general descriptions to decide where you want to put it. Support costs, as you can see, the second to last head in the format are shown separately, but they can also be included under each of the classes in a separate line item if you wish to do so. Can we move on, please? This is first half of the format. This is the second half of the format. The forex gains and losses, transfer between funds. There could be a transfer outside of the fund, or there could be a transfer into the fund. So this means money that comes into the grant fund from another fund, or has gone in from this grant fund outside to another fund, say to another project, or diverted for some emergency purposes to some other activity. Other movements, like I said, for emergency, or adding unused balance of another donor project or activity. So those can be added in other financial movements. There are the adjustments which give you, they're optional but advisable, because then you get a full picture, and it's easy to reconcile with the general purpose financial statement. Can we move on, please? Yeah. Some points to note. INPAS and PG both use accrual-based accounting. PG1 classify expenses as per natural heads, like I mentioned to you. To comply with PG1, that's something that is very, very important. Should easily be able to identify financial transactions as per donors, projects, or activity. If it's all a jumble, then you first need to kind of negotiate through the jumble and try and see if you can identify the expenses as per donor, projects, or activity. Notes to supplementary statements are crucial. Like I said, it gives a fuller, more comprehensive picture. Reconciliation and auditability also we have spoken about. And very important is that the practice guide one should be implemented in context to the statutory requirements of the geography the NGO is working in. For example, in India, we have to report our foreign funding expenditure or utilization separately. And there is a very specific list of requirements of how you have to do the accounting for it. So you need to make sure that that is not, you don't divert from that, just to be able to use the supplementary statement. I tried to make a little bit of a case study just to try and see if we can make a little more practical understanding of what the practice guide tries to do. Yeah, can we move on? I think the next slide has this case study. Yes. Completely fake name. Hopefully nobody exists with that name in the world. Maybe they do, I don't know. Came out of my imagination, or rather came out of ChatGPT when I asked them names for NGOs. And we have the generous donor, which definitely is fake, right? So yes, so we have this grant from the generous donor for 2024. It continues as a grant that has been coming to us for years, and they help us fund digital learning and remedial classes, after school classes for street children. They have also given a grant this year to purchase school pass and laptops. The project has been running successfully for the past 3 years. The opening balance of the grant as on 1st of January 2024 is $1,240, which has to be a part of, if you recall the format, has to be a part of the supplementary statement. The the donor has told us to do the PG1 formatting, reporting as per PG1 supplementary statement format, and the New Horizons Trust does not follow INPAS. The finance team is attempting to do this. Now, the next step is on what does this look like as per the books of the accounts of the organization. Next slide, please. Ross, yeah, excellent. Is everybody able to see this? I hope, because I tried to fit it into a pretty long Excel sheet into this. Okay, so as you can see, you have the restricted grant, you have the capital grant, you have some other income, which is fees for parents and bank interest. You have your project expenses, which are salaries and HR costs and multiple things. As you can see, this is a mixed presentation of expenses. It is not a completely natural presentation. For example, the event cost doesn't necessarily, show you a natural classification for what the event costs include. Then you have the organization overheads, which again have a more of a functional, functional look. But that is something that we always have to kind of tackle in NPO accounting. Then you have the assets that they have bought this year, less the depreciation they have charged for them this year, and the balance as per the bank account of what is remaining from the grant at the end of this year, 31st December 2024. 2025. And then, the brought forward account. So this is what it looks like in the books of the organization. Then what I try to do is I try to map each aspect, each of these heads with the classification that is shown in the supplementary statement. Can we move to the next slide, please? Yeah, please let us know in the chat if you like us to go back to the previous slide for a bit, if you want to take a look at it. This is what I did. I kind of mapped this against the format of the PG1 supplementary statement. So we have the grants and donations, we have the other income. If you recall the statement, it says list by type, which means that in the statement we'll have to give the breakup of this income. Or in the notes, we can give the breakup of this income. We have employment, which takes all the salaries, all the HR costs, supplies and materials, which takes the actual direct supplies and materials used in the center. And then there's computer rent, professional fees paid to some of the external teachers who come into the center to teach computers and extra remedial classes. Then you have the travel expenses of the staff and of all of the teachers to and fro. The organization also has a bus, if you recall the case study. So the movement of children from the schools to the center. So all of these are then mapped against the supplementary statement. Excuse me, sorry. Then you have the support costs, crucial, but obviously a matter of contention with donors most of the time. But you have senior management salaries, you have communication, outreach, and fundraising, which are also allocated to this project as a piece of the whole organization's expenses on fundraising and communication and outreach. I'm not going to the details or the percentages or anything like that right now because it will complicate everything. We want to keep this simple so that we are able to kind of demonstrate how it looks like in the supplementary state. Now, how do you decide where this is going to be mapped, right? Go to the practice guide one. Look at all of these explanations, all of the explanations that are there. Income is fairly simple, right? If you're following INPAS, you have to follow the rules, I won't call it rules, but the principles of revenue recognition and how revenue is to be taken into the general purpose financial statement, how it has to be booked and accounted for. If you're not following INPAS, you go with how it is booked and accounted for in your accounting in your general purpose financial statement. Income, as you can see, is a whole bunch of things. We had a lot of back and forth about income. We had a lot of back and forth about almost all the issues in the bag, but expenses were one of the most interesting things that we talked about. Right. How does this look? What does it look like in the final report? Can we go to the next slide, please? Yes. Can you go to the final report, please?
Yes, I can, Tejas. I have so many things open. Give me a second. There you go.
Good. I hope people are able to see it. If not, we can kind of increase the size of the document. It's just that I wanted it to fit in one screen, which is why I thought the size would make sense. However, we can break it up. As you can see, right at the beginning, mention name of the organization, period, right at the top. We are also going to talk about the project and the activities that are a part of this supplementary statement. What this supplementary statement denotes, what it shows, and what it is about. It is right at the top. The currency, obviously, is shown for everybody's understanding. I have used USD, the United States dollar. And as you can see, we have tried to put all of these classifications as done in the mapping, put into and grossed up and put into the statement. This is what it looks like. Pretty neat, in my opinion, and very concise and easy to understand. It also talks about, so some of these adjustments that are adjustments, they are the heads that are required for after total. This stay. Just go back up, past. That's it. Sorry, that's it. Sorry, the mother tongue. What do you do? So the foreign currency translation gains and losses I have not taken right now, just to keep it simple. Transfers and other financial movements I have not taken right now. There are a lot of other complications that also may arise and may be there. As just to make this simple, we have tried to keep it to the basics, right? Change in grant fund or balance, the opening and the closing. Now, if you can see here, the closing balance shows 8,950, which is basically only after all of the revenue expenditure, or all of the revenue items are put in, the income less all of the expenses. However, if you recall the case study, we have spent money on purchasing assets. So that option adjustment is a part of the lower section. After 8950 closing balance, we adjust it further. And at the end of it, we kind of get a closing balance of $550, which is remaining with New Horizons Trust for this particular project, this particular donor fund. This is how a supplementary statement will look like. And certain points to note. I have kept 10 minutes for questions. So I just have 5 more minutes to wrap this up, the case study up. Can we go back to the PPT, please? Yeah. So the steps that we followed, we took out the trial balance of that particular project, particular donor fund. We mapped all the heads to the supplementary statement format, and then we summarized and charted the numbers into the supplementary statement format. We made adjustments for purchase and depreciation of fixed assets. And at the end, we have to reconcile the opening and closing balance between the NGO's trial balance figures and the SS. And if you look at the NGO's trial balance figures in the slide before, you will see that. Can we just very quickly move to the previous slide, please? Yes. As you can see here, just at the bottom, before liabilities, you have the balance as per bank account, which is $550. That was exactly the amount that was there in the closing balance of the supplementary statement, if you recall. So yes, this reconciliation is crucial. It means that what you are showing in the supplementary statement is in accordance with the general purpose financial statement. I apologize if you can hear sounds of explosions. Okay, perfect. We burst firecrackers whenever we can. Yeah, so not to worry. Next slide, please. The slide, which is a closing slide. Yeah. All of these numbers must be traced and reconciled with a general purpose financial statement. I cannot begin to stress that, because the whole idea of a supplementary statement is to make it into a piece of, just take out a piece of the general purpose financial statement and show it to a user. It has to reconcile with the bank balance. It has to reconcile with the project balance. Now, the entire process of reconciliation, it's an entire separate case study, which I might undertake at some point. We have kept this case study simple, like I mentioned. There will definitely be other complexities, but which we have to learn how to go and work with as we go on. The adoption of INPAS and the practice guide 1. In another important thing, I may have mentioned this, but I can mention this again, is that at the end of the practice guide, you will see a whole bunch of reporting formats. These are the permutations and combinations that you can do of the supplementary statement, of the information that is shown in the supplementary statement. You can kind of have additional columns on but donor currency. You can have budgeted amounts against the actual expenditure. You can have multiple time periods within the supplementary statement. So a lot of uses, a lot of ways in which you can kind of, as per your contacts and as per your requirements, show the funding utilization and the status of a grant or a project or activity through the supplementary statement. And that's time. We have 10 minutes for question and answers. And if you would like to see any of the previous slides, Sam, so good to see you.
Tejas, thank you so much for your presentation. That's fantastic. Sam is here as well to help plow through some of these great questions that are in the chat. I'm just dropping into the chat as well an email address of Amit if you want to contact Humentum, if you need any assistance with anything that Tejas has gone through, or you want to talk about applying things further. Tejas, I'm going to let you get some of that liquid inside you as you've been talking a little bit. And I'll read out the first question for you, which Wajid said, can NGOs refer the framework of the financial statements. Can we refer that the framework of their financial statement is NPAS, or they keep it IFRS? Tejas or Sam?
I can take that. So yes, you can refer to INPAS as the framework for your financial statements in exactly the same way that you would refer to IFRS. The auditor could say these financial statements have been prepared in accordance with INPAS. They give a true fair view in accordance with INPAS. So absolutely, it can be referred to as an authoritative framework in the same way that IFRS can.
That's beautifully answered. He also asks if it's rule-based or principle-based.
So INPAS is principles-based in exactly the same way that IFRS is. The practice guide is a pragmatic decision to agree on a set of headings. It's rules-based. There's nothing intrinsically right about those expenditure headings. It's just a pragmatic agreement by donors to harmonize. So INPAS, principles-based, practice guide, rules-based.
Rules-based. Yep.
Lots of people, one person made the comment, but lots of people agreed with it and thumbed it up and gave it hearts, said they would like an Excel workbook with all of the financial statement formats and reconciliations, etc.
So this has been a subject of lots of discussion. There is a set of illustrative financial statements in the annex to the implementation guidance. So if you go to the inprs.org website and you go to INPAS, you can download the implementation guidance, and the annex of that is one set of illustrative financial statements. The big issue with these, and the reason why standard setters don't like illustrative financial statements, is that, and the very reason why they will not publish an Excel version, is that every organization is different. But Ross, your clickety-clacking is very noisy. And the risk of copy-paste syndrome, if you get a spreadsheet, is very, very high. So I'm sure there might be other people out there who will produce Excel spreadsheets, maybe Humanity will, I don't know. Certainly the standard setter, the foundation, will not, for that reason, that the risk of copy-paste and not applying a principles base, but just going, oh, I've got this spreadsheet, I'll just do what it does. So that's why the foundation will not be issuing an Excel.
It wouldn't be a step forward, would it? I mean, it would just be the same thing as has been happening before, where organizations would just take some format and, copy paste it. So I think that was one of the reasons why not do it.
What would be nice, I think, is a sort of mapping tool. So you plop in your chart of accounts and you've got a drop down list from the expenses headings, just like you did, and then maybe it does a pivot, but that isn't really the same as a sort of Excel spreadsheet that's got the whole thing in it. It would just be a kind of mapping tool that does exactly what you did in your brilliant presentation.
Yeah, I think it's more valuable for the PG one rather than the entire impact, because the entire impact is so much more than just the format. It's just so many other.
Right. The next question is, does NPAS make provision for consolidated financial statements for an NGO that is a parent with subsidiary NGOs?
It does. If you download INPAS, you'll find on page 21, section A2.48 has got a whole section on how to define who the reporting NPO is, its reporting boundary. And section G of the entire standard is titled Consolidated and Combined and Separate Financial Statements. So yes, it is covered.
Elizabeth asks if she says she's going to go through all of this after the webinar, and is there a way to get questions answered? We're answering your question right now, Elizabeth. Will there be a group or some sort of platform where we can interact, try and adopt this format? Or will there be such an initiative? There are several initiatives trying to get off the ground, and certainly, Elizabeth, if you are part of Humanity Solutions Hub, we can have a discussion group set up there.
Brilliant. And can I just say also for INPRF, if you go to the Get Involved menu, we are planning to set up communities of practice for NPOs, funders, regulators, auditors, education providers, and software providers. 6 communities of practice. You can sign up there to register your interest. But absolutely join something that Humentum is doing as well, or instead. And there's plenty of places, I think, to, yeah, compare notes with other people and have some clinic sessions and peer learning. Yeah.
Okay. Wajid gets the award for the most questions and asked in the chat. If there was a prize I could give you, I would give it to you. How does the financial statement address the different ways of the revenue recognition based on meeting the award's obligation?
Wow.
Okay, that's a big question. I'll give you a very short answer. The treatment in the big question is, do I recognize it as I get it, or do I defer it? The answer depends on whether you have something called a delivery obligation. That is much more than just a restriction. So just the fact that income is restricted doesn't prevent you from, or unspent restricted income doesn't prevent you from recognizing it. In the section on revenue, there's a very detailed definition of what delivery obligations are. And if you have a delivery obligation, then you defer revenue recognition until and to the extent that that obligation is fulfilled. But that's a very technical topic. So that's the biggest headline.
I think specific questions on specific aspects and how they're treated is probably not the space right now to talk about, and we don't really have the means and the time to do that. But if you have any specific questions on the practice guide 1, we can definitely address them right now. So
okay, we have 4 minutes and about 1,000 questions to get through. Just
right.
So keep them short, and we'll get through as many as we can. Is the practical guide for project or organizational financial statements?
So INPAS is for whole of organization statements. Practice guide 1 is for a specific and specified, you have to say what it is, activity, project, or grant. It's a subset of what's in the whole thing, and the title has to say exactly what that subset is.
What is the mandate to make these a requirement for NPOs? I mean, how can these be made enforceable by the entities? That's a great question.
Yeah, they're mandated by the jurisdictions. So the INPAS as a whole, for the whole of entity financial reporting, it has to be mandated by your regulator. For example, Kenya published a technical advisory on the 21st of October saying INPAS will be adopted in Kenya. There'll be a roadmap published on the 1st of January, and there'll be other countries following. So for the whole of entity reporting, if you're allowed to voluntarily adopt it, then go ahead if you want to. Mandating it, requiring it, is subject to each jurisdiction in exactly the same way that IFRS is. When it comes to PG1 for specific grants or projects, that's really between the donor and the NPO. The donor could require it. As an NPO, you could ask for it, you could push for it, you could develop your budgets in the same headings, and then you can report against PG1.
All right, we're going to go to the next one, Sam. I'm going to cut it short, sorry. We're going to do one more, and then what I'm going to do is I'll grab all of these questions from the chat, and then we'll get these posted out to you in the follow-up email. So if you have asked a question, I'll make sure you get an answer as we are burning through minutes right now. Is NPAS recognized as a financial reporting framework in all countries?
No, not yet, but it will be. Give it time.
We hope so, eventually.
Hope so, yes.
TJ, sorry, what were you going to say?
It needs to come from the sector, and it needs to be pushed from the sector, from people, from you and me and all of us on this 102 strong team of people who have joined on this call. I mean, unfairly, unreasonably, or unfortunately, most of this is driven through donors. So we really, really wish that they are with us on this.
Beautiful. That's a great ending. I'm gonna stop answering questions there. We'll get the rest of your questions answered in the FAQ. The next webinar is next week on the 12th. You should all know about it. We'll be following through. We're going to do about 60 minutes, so you can get your 60-minute webinar, and then if you need to leave after that 60 minutes, you can. Tejas and I are going to hang around for a further 30 minutes after that initial 60 minutes to talk about regionalisation and getting the reach out there. So if you've got an extra 30 minutes for next week's webinar, then we'll be there for the full 90. Thank you all for coming. We appreciate your time and interest. And as I say, if you need anything, you can contact Amit directly, and I've dropped his email there. Thank you for the applause. That is beautiful. I wish you all.
Oh, thank you so much. That's really amazing. Thank you.
Thank you, Tejas. Thank you, Sam. Thank you, everybody. Have a great day. We'll see you next week.